Hi, so if you are an established private company watching this video, I hope you had a chance to watch our startup company video, because really the overall tax function improvement process that we apply for startup companies applies just as well for established private companies from the standpoint that it's just more complex level. And I also like to point that out from the standpoint that it really helps to start perfecting your tax function early at the startup phases, because you'll be that much more prepared when you become an established private company with respect to those four main prongs of your tax function, being the tax provision preparation, tax return preparation, special projects, and then finally outsourcing. So with respect to an established private company, when you're dealing with the tax provision itself, no longer are you just dealing with perfecting deferred tax assets, which when you're a startup company, that's really your main focus, because you're probably not really at a viable stage in terms of your product or your service. You're generating a lot of net operating losses and carrying those forward and also tax credits. That's really your focus at that point. Now when you become an established private company, you may be looking at profitability. You also may be looking at expanding your operations, in which case you have various different entities that you're dealing with. Your operations may have expanded beyond just federal, and then of course whatever jurisdiction you were headquartered in, into multiple jurisdictions, be they state or foreign jurisdictions. So you have all of these different additional complexities, these different layers that need to be incorporated into your tax provision. So once again, it's that much easier to add those layers onto your tax provision if you've been consistently carrying forward your DTAs and your tax provision from one year to the next since becoming a startup company. But certainly you can do the same as an established private company. You can begin preparing your tax provision at that juncture as well. It just may take more time and resources, because now you're having to kind of backtrack, reconcile all of those amounts from the earlier years, and then of course carry forward those deferred tax assets, because now you're going to want to utilize them. You're actually going to want to utilize them in terms of offsetting taxable income and tax liabilities. So just another emphasis in terms of just the benefit of really starting the tax provision very early on in a company's life cycle, so that they're much better prepared when they hit these growth opportunities, especially as established private company. But certainly, don't be alarmed if you haven't already established a very effective tax provision. Certainly, we can start at this juncture. It just may take more time and more resources. Also, I wanted to point out another one of our videos, which is on effective tax provisions. And we spent a lot of time at Clifton Douglas really perfecting our core tax provision model, so that it really equates to a smooth audit. When you're an established private company, the nice thing is you're still looking at, for the most part, just one tax provision annually, one set of financial statements. You're not into that kind of that quarterly close process that you have when you're a public company, or where you're anticipating going IPO. But at the same time, this is a great time to really perfect your tax provision model, to really incorporate those features that will allow your audit firm to review your tax provision smoothly. Because when you get to a point where you're looking at going IPO, or when you're public, you're no longer going to have that flexibility. So from the standpoint that you can already establish a core tax provision model that's very efficient and easily reviewed, you'll be that much better prepared as your company grows and potentially goes IPO and potentially becomes a public company. So with an established private company, the tax provision is very important to perfect at this stage if it has not been perfected already at the startup phase, and to carry all of those DTAs forward and those tax attributes forward for utilization. Now, beyond that, the tax return is very important as well. And previously, when you were a startup entity, Pretty simple. You're filing a federal return, probably the return related to whatever state in which your headquarters is located. But now, as with the provision, you are operating in a tremendous number of states, potentially, or many more than just one state. You might even have foreign operations. And now you're dealing with all these different entities and also foreign transactions, maybe transfer pricing issues in terms of intercompany transactions. All of these not only increase the number of returns that need to be prepared and filed, but they increase the complexity of each return themselves, so that the schedules that need to be attached become much more voluminous. You might have 5471s or 5472s that need to be included. You may have affiliation schedules that need to be included. You may have schedules UTP that need to be included. All of these complex schedules, all of these attachments possibly need to be included. And also what you were previously calculating now becomes that much more complex. Your R&D credit typically becomes quite complex. Your taxable income calculation becomes quite complex because now your operations have grown substantially and you have all of these different state, foreign, and federal factors that are potentially impacting your overall return. So it becomes very complex. But to the standpoint that you've already set in place a very good process from the startup phase, you'll be that much more prepared to kind of roll in these additional levels of complexity with respect to your tax returns as you go forward. And again, don't become alarmed if you haven't, because you can certainly start that process now in terms of perfecting your overall tax return process, making sure we hit the extension deadlines, the estimated tax payment deadlines, and of course the extended due date deadlines. But it's just that much more effective if that was started quite a ways back when you were a startup entity. So again, tax returns is another area that we certainly need to deal with and perfect as you become a more established private company. Now, also with respect to special projects, as a startup company, really the only special projects you're really concerned with were high-level reviews of the R&D credit and 382, 383 tax attribute limitations, because all you're really generating at that time were deferred tax assets. Now, all of a sudden, not only do the 382, 383, and the R&D credit reviews become much more complex and possibly need to actually have a study performed by the audit company or by the auditor because it's not a restricted service, or by a separate tax service provider, but now all these other reviews or studies come into play, like state nexus, apportionment, filing methodologies, transfer pricing, permanent establishment. I mean, these are just a few. There can be a host of different studies that come into play. So again, special projects becomes much more complex, much more time consuming. Now, if again, at the startup phases, you already had established a review for the R&D credits and the 382, 383 tax attribute limitation analyses, that information can just be transferred over to the whatever tax service provider is in fact preparing the study, and it'll be that much smoother to get through that process. So to the extent that you started early in some of these areas, it'll be that much smoother. Some of these other areas that are new are, again, it's just becoming an issue now, so it shouldn't really add a tremendous amount of complexity. It'll just increase the magnitude of the special projects that you need to work on. But certainly R&D and tax attributes, you're going to have those way back when you first became a startup company. And so if you don't have that documentation up to date, the company's going to have to go all the way back to inception in order to gather the necessary data in order to complete the study, and that's just a lot of additional work that really isn't necessary. So special projects become more complex. They might turn into studies, and they might turn into a lot of studies depending on how complex your company is becoming as a private entity or established private entity. So certainly look out for those. And then also with respect to tax department outsourcing, the magnitude increases along with all of this increase in terms of the number of state jurisdictions that you have operations with, also with respect to foreign filing jurisdictions, and also with respect to the complexity complexity of what you're filing or in the returns that you're filing. All of these complexities and just this increase in magnitude is going to typically generate more notices, and notices that you need to have someone track on a consistent basis and be able to deal with on a consistent basis with all different types of jurisdictions. So again, it helps to really outsource that work, and hopefully you've already done that at the startup company level. You're already having a separate tax service provider outsource and do all that work. That helps out tremendously. Also, now you become more and more ripe for audits, especially if you become profitable and now you're using your tax attributes to offset that, the taxable income and tax liabilities. Whereas when you were a startup company, you were just generating DTAs, you weren't generating any profit. It's not really that much of a red flag for an audit. Now you suddenly become much more interesting from an auditor's perspective. So it's good to have that outsourced tax service department or tax service provider that can provide assistance with respect to those audits. And then also with respect to indirect taxes, you may not have had a viable product or service in the past as a startup company, and now as a more established private company, all of a sudden sales use tax becomes very important. And as you grow, property taxes become more important, payroll taxes become more important, all of these indirect taxes become more important. So just to outsource those tax department day-to-day functions helps tremendously in allowing an established private company to focus on the tax provision work, to focus on the key operations of the company and their own internal tax department itself. So again, the point of this video is really to kind of show the same process, the same four-pronged approach with respect to dealing with the tax functions and improving and perfecting the tax functions of established private companies, of which we at Clifton Douglas have dealt with many of these, especially being in Silicon Valley, where you have a lot of private companies, you have a lot of startup companies. And so the same approach that you applied at the startup phases, which is to, again, perfect the provision, the return, the special projects, and the tax department outsourcing, applies at the established private company stage, just at a more complex level. You need more resources. You need to look at things more in depth because your company has expanded. Your company has become more complex. And the earlier that you do that, the earlier that you start, hopefully at inception, the better you are, the better, more equipped you'll be as you grow and as you become a more established private company. But if you haven't, done that, then we can certainly start at the established private company stage and get you where you need to be. It just may take more time and resources. So certainly, if you are an established private company and you need assistance, then please give us a call, or you can reach us at cliftondouglas.com. Thank you so much for watching today, and take care. Bye-bye.